So our report is all about fund and other investment. So next, okay. So fund and other investment. So is defined as cash and other assets set aside for specific purpose, either by reason of the action of management or by virtue of a contract or legal requirement. So it may be form of cash, securities, and other assets. So ang fund and other investment, so kung siyang ginaset aside mo ba kung may mga utang ka, pero mo siya ginabutang. So example sa isang sinking fund. So what is a sinking fund? So, a sinking fund is a fund containing money set aside or saved to pay off a debt or bond. So a company that issues debt will need to pay that debt off in the future. So and the sinking fund helps to soften the hardship of a large outlay of revenue. So a sinking fund, so gabulig siya sa mga utang mo or sa bonds mo. Next is mutual fund. So mutual fund, the money that's collected in is then invested in capital markets. So instruments such as shares, debentures, and other securities. So the income earned through these investments and the capital appreciation realized are shared by its unit holders in proportion to the number of units owned by them. So yung mutual fund is mga gina-invest mo gyapon sa ibang company. So ipanghatag mo man gyapon na sa mga investor mo. So the next step. So illustration. So sinking fund. So sinking fund cash, then sinking fund securities 2 million, accrued interest receivable so 60,000. So total sinking fund of 4,150,000. So less appropriated, may appropriate ka nga 2 million. So additional appropriation is 2,180,000. Next. So sa entries, record ko sa sinking fund. So sinking fund securities 2,120,000. Then credit ka sa sinking fund cash 2,120,000. Then next is sinking fund cash 120,000. So credit ka sa sinking fund income ng 120,000. Sunod sa sinking fund naman yung allocate mo naman sa cash is sinking fund cash nga 2 million, then cash nga 2 million. Then may accrued na interest, so accrued interest receivable na 60,000, then sinking fund income na 60,000. So i-close mo naman siya sa so itong i-appropriate mo nga 2,180,000 sa retained earnings, so 2,180,000, then retained earnings appropriated for sa sinking fund, so 2,180,000. So next natin. So sa expense naman, magbayad ka sa expense mo. So simple lang, sinking fund expense, then cash diretso, 20,000. Then sa sale, sinking fund cash, baligya mo. Then sinking fund securities, 2 million kag gain on sale. So 2 million man to siya ang original price niya, so gibaligya mo sa 2,1. So may gain ka nga 100,000. Then next. So illustration number 2. So Christian bought a car worth 1,500,000 with a down payment of 750,000 and the balance is payable at the end of every 6 months. So for 6 years. If the interest is at 8% compounded semi-annually, how much is the semi-annual installment? So ang revenue is equals to AIV all over 1 minus interest raised to the power of negative, ano siya, time kag siya kag time and month at ay tama. Tapos 750,000 multiplied by 0.04 na compounded semi-annually siya, so 0.04 ang gamitin mo kay half a year lang siya. Then divide 1 minus 1 minus 0.04, so raised to the power of negative 12. Nakuha ang negative 12 is 6 years times 2 kay semi-annually. So 12 then is equals to 79,914.13. So tanaw to sa table. Next natin.
Sorry.
So next table is amortization table nito. Tong first period is tong iya nga cash nga ginhulog, so 760,000, then interest din nga 30,000. So less nakuha na din itong nakuha ng 79,000 is itong kagina nga formula. So, next, i-less mo lang. So, 30,000 less, ay, 79,914 less mo lang ang 30,000. So, mukha mo na ang repayment of principal nga 49,914. So, pasunod lang na siya. Less mo lang siya sa 750,000. So, mukha mo lang 700,000. Tapos mo lang sa 0.4, mukha naman ang 28,000. So, less mo lang ang 79,914. So, so on and so forth. So, kung mo lang siya.
So my topic is about derivatives. So what is derivatives? Next. A derivative is simply financial instrument that derives its value from the movement in commodity price, foreign exchange rate, and interest rate of an underlying asset or financial instrument. Actually, a derivative is an executory contract, meaning it is not a transaction but an exchange of promises about future actions. So, next. So there are types of financial risk. So first is the price risk. Is the uncertainty about the future price of an asset. So the price risk is, syempre, di ba, from time to time kapag ang value sang mga equipment or mga mga equipment, di ba, so do magkaroon ka sa price risk so from future time. So tapos credit risk is the uncertainty over whether a counterparty or the party on the other side of the contract will honor the terms of the contract. So, yung credit risk is, syempre daw, kasi may possibility gid nga nang hindi mabayad ng ang may loan tapos hindi siya mabayad. So, na credit risk. Tapos interest rate risk is the uncertainty about future interest rates and their impact on cash flows and the fair value of the financial instrument. So amo to Japan, di ba, interest daw, di ba, magtaas ang interest niya pagka future time. So, hindi man siya maiwasan. Tapos, foreign currency risk is the uncertainty about future Philippine peso cash flows stemming from assets and liabilities dominated in foreign currency. So, amo to. Bago man Japan ang currency rate. So, hindi natin balaan kung ang balisang money Philippine peso is magtaas or magnagot. Next na. So, measurement of derivatives. An entity shall recognize and measure all derivatives as either asset or liability at fair value. Both the fair value and notional shall be fully disclosed. An unrealized gain or loss is recognized when there is a change in fair value. Whether the change in fair value is recognized in profit or loss or in other comprehensive income depends on the following situations. So first, the derivative is not designated as a hedging instrument. Second, the derivative designated as a cash flow hedge. And last one is the derivative is designated as a fair value hedge. Next. So there are examples of derivatives. So first is the interest rate swap. Second, forward contract, future contract, and option. Next natin. So interest rate swap is a contract whereby two parties are agreed to exchange cash flows for future interest payments based on a contract of loan. So we have a illustration. Example. So illustration. On January 1, 2019, EC Company borrowed 5 million from First Bank at a variable rate of interest for 2 years. So the term of loan are the principal loan is payable on December 31, 2020. The interest is payable on December 31 of each year based on the prevailing interest rate at the beginning of the year. Exactly. So to protect itself from fluctuation in interest rate, on January 1, 2019, EC Company entered into an agreement with with Second Bank as the stipulator to receive variable interest and to pay a fixed interest based on an underlying interest rate of 10% and notional amount of 5 million. Exactly. This receive variable pay fixed interest rate swap agreement with the second bank is the derivative financial instrument. This derivative contract means that EC company shall receive a swap payment from the second bank based on 5 million if the January 1 interest rate is more than 10% and will make a swap payment to second bank if the January 1 interest rate is less than 10%. So, kumbaga halimbawa ang interest rate is magtaas next year. So, though kumbaga magtaas sa 10% do ang second bank is do mag-exchange siyang do magkatag sang money sa EC company pero kung magnubo ang EC company is do siya naman ang mag-swap sang payments sa second bank. So like other. So may ang sabi niya. So net cash settlement ang ginapangita. So the net cash settlement between AC company and the second bank is the difference between the variable interest to be received and the 10% fixed interest to be paid and would appear as follows. So sa December 31, 2019, so di ba, ano ba siya 10%? So 5 million multiply mo sa 10%, so ning 500,000 tapos tong fix niya 10%. So 500,000 tapos pagka next year, di ba 12% na siya. So ito 600,000 na. 5 million times 12%, 600,000 tapos na fix niya na 10% is 5 million. So net cash settlement niya ihatag sa second bank sa EC company is 100,000 kaya na taas man ang ang interest. So second bank ang daw may sa obligation. So may another computation naman siya. So kung ano itong difference sa variable rate kag sa underlying interest rate. Tag multiply mo lang sa cash ay sa national amount na 5 million. Next natin. So another is forward contract. A forward contract is an agreement between two parties to exchange as a specified amount of commodity, security, or foreign currency on a specified date in the future at a specified price of or exchange rate. Simply stated, a forward contract is a commitment to purchase or sell a specified commodity on a future date at a specified price. Example. On January 1, 2019, so may illustration pa. On January 1, 2019, Gentle Company expects to purchase 50,000 kilos of tobacco from a supplier on January 31, 2020 at the prevailing market price on such date. Recent market factors indicate the market price of tobacco per kilo is within the vicinity of 150 pesos. To protect itself from variability of the market price of tobacco, Gentle Company entered into a forward contract with a speculator back under the following terms. Next slide. So first, if the market price is more than 150 pesos, the excess is paid by the bank to Gentle Company. So second, if the market price is less than 150 pesos, the deficiency is paid by Gentle Company to the bank. So this contract is derivative financial instrument and the objective is to assure that Simple Company shall pay 150 pesos per kilo on January 30, 2020. Okay. The forward contract is designated as a cash flow hedge. So the primary financial instrument is the highly probable forecast purchase of 50,000 kilos of tobacco on January 31, 2020. So the forward contract is designated as a cash flow hedge. So Ari ka ng market price of tobacco per kilo. So, sa December 31, so 170. So, nagtaas siya. Di ba? Kay 150. Tapos, pagka 2020 naman, naging mo siyang 175. So, may obligation. Next natin. So, competition. So, market price ng December 31, 2019. So, 50,000 kilos of tobacco. Multiply mo sa 170 nga per market value sa December 31, 2019. So, 8,500,000. Tapos, itong underlying price nga 50,000, multiply mo sa 150,000 na underlying price. So, 7,500,000. So, mayroon isang forward contract receivable kay kitaman si General Company. So, nagka-receivable ang 1 million. Tapos, sa 2020, nagtaas naman siya sa 50,000 multiplied sa 175. So, 750 million. Underlying price, 75. So, sang 2019, di ba, meron tapos ng forward contract ng 1 million, tapos nagtaas. Tapos ang 2020, nagka-receivable ng 1 to 50. So, ano ba lang? Nagka-increase na siya sa 50,000. So, the computation means that the general commission received from the market total of 1 to 50,000 on January 31, 2020. So, may journal interest na. So, sa December 31, so amo to, di ba, naka-receivable ka nga 1 million kaya nagtaas ang ato niya market value. So, debit ka lang forward contract receivable, debit, credit ka sang unrealized gain forward contract. So, the amount is not discounted anymore because it is to be received on January 31, 2020. Okay, hindi siya discounted kay do next month naman siya. So the other in the forward contract is a component of other commercial income because the forward contract is designated as a cash flow hedge. So ito yung realization do i-recognize mo siya sa sa OCI. So 2020, January 31, forward contract receivable, di ba, nagka-increase na ng 250,000 from 1 million naging 1 to 50. So nagka-increase ang forward contract receivable. Debit ko forward contract receivable, tapos ang RS gain para 250,000. Tapos itong cash, forward contract, na 1 to 50,000. Kaya naka-receive na ito sang cash. Tapos, i-recognize mo itong purchases mo. So, purchases na 50,000 tobacco, multiply mo sa per market value sang January 31. So, 8,750,000. So, unrealized gain 1 to 50, purchases 1 to 50. The unrealized gain for contract is credited directly to purchases. The unrealized gain can be credited to gain on forward contract which is non-offset against the cost of goods sold in 2020. Okay. Next na. Hello.
Next na.
Next natin, next. So, future contract. A future contract is a contract to purchase or sell a specified commodity at some future date of a specific price. So, we have a illustration. The rubber company produces battery apple juice. Apple juice concentrate is typically purchased and sold by the kilo. Entity uses 50,000 kilos of apple juice concentrate each month. On December 1, 2019, the entity entered into an apple juice concentrate futures contract to purchase 50,000 kilos of concentrate on February 1, 2020 at a fixed price of 50 pesos per kilo or 2,500,000. The contract means that if the price of apple juice is more than 50 pesos on February 1, 2020, the rubber company will receive a cash payment from the speculator equal to the difference. If the price is less than 50 on February 1, 2020, the rubber company will make cash payment to the speculator for the difference. The future contract is derivative financial instrument that is signature as a cash flow hedge. So computation. So isang kwan sa December 2019, so market price niya is 60. So naman siya, nagtaas siya. So February 1, 2020, 50 na lang mo. So computation na siya. Competition. Next natin. So market price sa December 31, 2019, which is 60, 50,000 times 60, so 3 million. So deduct mo naman siya sa underlying price. So future contract receivable. So do pa rin lang dyan sa forward contract. Pero do, ano siya. So 500,000. Market price February 1, 2018. So 50,000 times 52. 26. Underlying price is 25. So nag-increase siya po siya ng 100,000. Tapos, ang future order receivable sa December 31, 2020 is 500,000. So, nagka-decrease in future contract receivable at nga 400,000. No, siya receive pa na siya. So, kung paano yung decrease is from, di ba, from siya, from 60 na yun siya 52. So, nagka-decrease ta sang 400,000. Pero even though so mayroon siya punta gain niya 100,000 kay 50 man lang tong original price. May mo siya sang 52 sa February. So may 100,000 siya punta. So journal entries. So December 31. So debit ka lang. Future contract receivable. Credit unrealized gain. Na 500,000. So mo to, basta cash flow hedge ka na is ang gain i-recognize mo sa OCI. So 2020, Feb 1, debit ka purchases na 26. Cash, 26. Tapos, entry mo itong 400,000 na unrealized gain. So, debit unrealized gain, credit which contract receivable. Tapos, entry mo itong cash na na-receive mo, cash na 100,000. Tapos, credit niya po siya pang-receive ng 100,000. Tapos, di ba nagpa-gains mo? Unrealized gain, so 100,000 purchases, 100,000. So, next natin. So, last one is option. Option is a contract that gives the holder the right to purchase or sell an asset at a specified price during a definite period at some future time. An option is a right and not an obligation to purchase or sell. So we have an illustration. On December 1, 2019, stable company projects a need for 100,000 units of raw materials to be purchased at the middle of 2020. The raw material is selling at 50 per unit on December 1, 2019. The entity is concerned with the movement of prices of the raw materials between December 1, 2019 and July 1, 2020. As a protection against the increase in price of the raw material, the entity entered into a call option contract with a financial speculator by paying 50,000 for the option on December 1, 2019. So the call option gives the entity the right but not the obligation to purchase 100,000 units of the raw materials at 50 per unit. The amount of 50 is the underlying and also known as the strike or exercise price. The call option contract is the derivative financial instrument that is designated as a cash flow hedge. The primary financial instrument is the highly probable forecast purchase of 100,000 units of raw materials on July 1, 2020. So market price of raw material during December 31, 2019 is 52. July 1, 2020 is 55. So this means that the entity shall exercise the call option and therefore receive 500,000 payment. So, di ba? Hambal dire. So, nakaginabi siya sang 5 pesos. So, from 58 na siyang 55 sa July 1, 2020. So, 500,000, 100,000 multiply mo sa 5. So, from if the market price is greater than the strike or exercise price, the call option is said to be in demand. May next pattern na daw. Journal entry. So, December 1, call option. Cash is which is 50,000. Tapos ang December 31, call option. Tapos ang realized gain niya, 150,000. So, di ba, fair value ng call option is nagtaas ng 2 pesos. Tapos, deduct mo lang tong payment mo nga 50,000 para makuha mo ang gain niya 150,000. So July 1, 2020, call option 300,000 tapos credit unrealized gain call option 300,000. So paano siya gain pa sa, di ba? Fair value of call option sa July 1, 2020 is 55, nag-increase sa 5. So 100,000 times 5, 500,000 tapos i-deduct mo tong call option sang 2019. So, di ba may debit na 50,000 tapos may debit mo ng 150,000. So, 200,000 tanan. So, mo to. Deduct mo na to para magkapakas ang 300,000. Tapos, recognize man tong cash. Tapos, call option yung 500,000. Raw materials purchases. So, 5,500,000. So, 100,000 multiply mo sa 55. So, raw material purchases. Tapos credit cash, tapos unrealized gain call option nga 450,000, tapos purchases nga 450,000. So the unrealized gain is on a call option is credited directly to the purchases account. Okay natin.
Okay na. So next is we have property, plant, and equipment, which is
Ate, wait
governed
lang.
by...
Wait lang ate. Ang
Okay.
may time limit daw.
Nag-time na?
Daw na-reach na ang time limit. Kailangan mo na mag-end ata.
Okay. Stop ko na lang, Anay.